Welcome to the Bringg webinar. We're going to be talking about how to make convenience profitable, the secrets to successful grocery delivery. My name is John Berg, and I lead product marketing here at Bringg, and I'm joined by my good friend Nick Sherman.
Yeah, thanks, John. Director of Sales here at Bringg, and I focus on the grocery space.
So we're going to jump right in. This webinar is going to take about 30 minutes, and we look forward to hearing your questions. So as you have questions or feedback, please feel free to add right there in the chat box, and we will deal with all of the questions at the end of the webinar. If you have any further questions, you can also contact us directly through the website. So to get this started, the digital grocery market is undergoing a tremendous transformation. You know, if we look at Europe, for example, even in areas like the UK, France, and Spain, when we see the increasing competition for online grocery and convenient delivery, we're seeing tremendous growth. So even in a market, whereas the UK is already at 7.5%, in a market like Spain, they're projected to have 2x growth when we look at heading out over the next 4 to 5 years.
Yeah, and one of the things here, John, that we've seen is that certain markets are really lagging behind in terms of online grocery sales and adoption. So you can see the US here is at 1.5%, but that growth is projected to really skyrocket over the next 5 to 10 years. So 6x projected. And what's interesting here is that it really just comes down to consumer behavior. And it seems as though we're at this tipping point in grocery where people are really willing now to go online and have that be the predominant channel.
Really interesting. So, you know, as we look at different markets and their rate of maturity and digital adoption, grocery maybe has been a laggard compared to, for example, restaurants. We're seeing incredible growth over the last year, and especially looking to 2020 and beyond. So when we look at where is the growth in the grocery sector, you know, we see an average of 2 to 3% compound annual growth rate for hypermarkets and superstores, slightly higher when we start to look at supermarkets and neighborhood stores. When we talk about cash and carry, we're really looking at some respectable 4 to 5% growth rates. When we start to look at digital or online grocery, we're talking about 17 on average to 18% projected growth. And really what we're seeing here is a transformation in the user behavior, in where they want to be and where they want to go. And they're looking at digital as a new convenient way to do their regular shopping. So when we look at, you know, what's driving the shopper behavior, when we look at the data, 54% of shoppers say they started shopping online for grocery in the last 6 months. And when they're asked why they're shopping online, the number one reason is because it's convenient. Now this introduces an incredible dynamic where grocers are now being invited into their customers' homes, onto their doorsteps. And it's an incredible opportunity. However, meeting that opportunity is really challenging. When we ask shoppers, when shoppers are asked, what do you define as convenient? They're looking for same-day delivery. They're looking for it faster. So in the industry, we see an average of next day or 2-day planned deliveries. Increasingly, these shoppers that are going online, they live in the cities, they live in the suburbs, they skew a little bit younger. And these shoppers want it fast. However, only about 20% of shoppers currently have access to on-demand delivery or same-day delivery. When we look at what do competitors like Instacart, what do new marketplaces have to offer retail grocery shoppers, they offer them tremendous value. If you look at what Instacart is pushing these days, they're offering 2-hour delivery to customers, not just same day. However, for those same customers, for those same shoppers, once they've used Instacart, when Barclays asked those shoppers what would happen if that retailer, that grocer, was no longer available on Instacart, only 45% of shoppers said they would continue to shop with that same retail grocer. What we see is that overwhelmingly shoppers are open to engaging with other retailers through Instacart or looking for a different way to get their groceries, which means that there's really a strong level of disintermediation between the customer-grocer relationship when it comes through an intermediary like Instacart. So Nick, you know, as we look at this Instacart challenge, what are some of the things you're seeing in the North American market in terms of how grocers are adapting?
Yeah, thanks, John. One of the things that we're really seeing is that, the tipping point or the inflection point in the grocery industry was really when Amazon purchased Whole Foods. And when that happened, it really sent shockwaves through the industry in terms of, okay, it looks as though this is a strategic advantage in terms of having, robust delivery to fulfill the online need. And as that happened, Instacart really came in and filled a fantastic area for delivery and really provided that scale for grocery retailers. And as you can see here, this is showing kind of the mix in terms of how things are being fulfilled. But what we're seeing as a macro trend is that having control, and I'm going to kind of get into that, over the end-to-end supply chain is becoming increasingly critical for retailers, and being able to control that end-to-end customer experience. So that's kind of a macro trend that we're seeing, John, and we'll kind of dive into what that means and some of the considerations as you contemplate that for your business.
Thank you for that insight. So, as we look at what are the challenges that grocers are facing, one of the most important is the bottom line. And when Capgemini surveyed the market, they found that the average cost to fulfill, the average cost to deliver was $10. And depending on how the inventory is staged and picked, that cost can go up dramatically. However, when they surveyed customers to determine how much are shoppers willing to pay for that same delivery, they identified that there was an $8 average delivery charge to the customer. What that means is that on average, they're looking at just above a 20% deficit in terms of how they're going to fulfill that from the bottom line and financial perspective. Now, what that means is that grocers need to find ways to not only deliver that convenience that the online shoppers are looking for, but to do it in a more efficient manner than they're delivering today.
Yep. And as John has talked about, profitability is obviously critical, and the efficiency in terms of providing profitability in delivery and grocery is difficult to look at. And another thing to think about as we talk about marketplaces is really sustainability. And marketplaces have served a need in the grocery space, as I mentioned, as a very convenient way to service customers who want that online experience. Long-term, these solutions become difficult to sustain from a profitability standpoint, and we'll get into different reasons, which is why it's important to think beyond them. So really thinking beyond marketplaces means thinking long-term with the customer and having a deep understanding of this customer in mind. And the brand and the business really should be the main focus here. So when considering the brand, you want to ask yourself, do you have a direct customer relationship? Are you talking and selling directly to that customer? Have you established brand value? Have you established equity in that brand? And because of that, do you have the ability for remarketing opportunities and upsells and things like that? So understanding your customer within your brand is very important. Do you have visibility into that customer from a data perspective? Do you own that data? Do you have visibility into the data? Do you have behavioral data? And do you have the ability to convert on that data? So obviously ownership and visibility of that customer data, really, really critical. And then finally, do you have the analysis to measure and continuously learn from this data? So that's a really important thing to think about as you unpack your brand. And then from the business perspective, understanding your revenue. Are there lost sales potentially, or cross-sale or upsell opportunities that you're missing out on because of the marketplace? Is your margin becoming more thin because of this marketplace? Or are you losing that because of ads placement or discounts that you need to be featured on those marketplaces? And then finally, just freedom. Simply, do you have freedom? Do you feel as though you have freedom to be able to scale and grow with your customers as demand changes? Or do you feel like you are really kind of thinking about only one fulfillment channel? So as you think about sustainability, the brand and the business and unpacking that becomes very important. So moving on to things to consider as you consider your delivery orchestration platform and how you really want to think about growing those channels, there's different things to look at. The first really being your business strengths. And it's important to map your strengths and what are the competitive advantages that they give you. So for instance, is your business strength your retail locations, quite simply? Is it your SKU variation? Is it the amazing in-store experience that you provide? And then do you want to complement that with an online channel? It's important not to overcomplicate and really not reinvent the wheel, but more so leverage where you are already successful. The next thing to think about in delivery and fulfillment is how does delivery align with your company priorities? Is this a strategic advantage for you, or is this just something that you're offering in addition to other services? And then as you're thinking about delivery and fulfillment, who will manage your deliveries? Is this an in-house fleet exclusively, and is that your competitive advantage? Or is it maybe adding third party to that? Do you want to have different third party delivery as a service providers helping with that? Or is it a hybrid of the two? And then where are you going to fulfill your orders from? A lot of different things, and we'll touch on this a little later on, that you can consider when thinking about where is that origin point of your delivery. Is it a dark store in the back of your retail location? Is this an automated micro fulfillment center? Is it curbside and click and collect, or is it all of the above? There's a lot of things to consider. Moving into cost management, where are your sunk costs? And what are the most important cost inefficiencies, and how can these be addressed? Do you have adequate budget for a digital transformation, quite simply? Do you have internal buy-in across different parts of the business, and do you have support for that? Obviously, company priority, understanding and trying to consider your strategic priority for the next 12 months, 2 years, and defining a plan with clear milestones. Very, very important to understand these milestones, and then thinking, do I have the resources to actually fulfill on the strategy? Do I need to hire, or do I need to promote within or move people into different roles to be able to adopt? From there, pricing strategy. How are you going to price your delivery strategy? Are you going to be passing this on to your customers? Are you going to be rolling out maybe an annual membership fee like an Amazon Prime? Are you going to be absorbing this maybe similarly to how Walmart has really done that recently and announcing that across 1,600 of their stores? So there's a lot of different ways and a lot of different opinions on pricing, but it really has to make sense for your business as it relates to delivery. From a customer expectation standpoint, really important to understand what are your customer expectations and how are these changing? Is the in-store experience valuable to them? Is delivery really the new demand that they are asking? So it's important to intimately understand your customer and make sure that you're delivering on the expectations that they have of you as a business. And then finally, really looking at ownership and who are the key owners of each area in your business, and how are you going to align your organization to give them the autonomy that they need to fill on this, and making sure that everyone and all resources are aligned towards rolling out this new direction. So moving on from strategic considerations, as you can tell, there's a lot of things to think about. There's a lot of different things happening in grocery delivery. And when thinking about how to grow and expand your grocery delivery operations, it can be noisy, it can be overwhelming. So some of the things to consider to help simplify are really fulfillment, returns, the destination or the origin of the grocery, what fleets you're going to be looking at, and then the ecosystem. So I'll quickly go through those. I talked about fulfillment options. There are a lot of ways to fulfill on your orders today. That can be, from a micro fulfillment center. It can be a curbside option. It can be a dark store. Choose the fulfillment model that's going to work for you. That's very important. The next thing to consider is returns. How do you handle returns? Do you have a set workflow in place? And is this something that can really be mechanized back upstream within your supply chain? Very important to think about returns throughout this. The origin and destination, we talked about this a lot already. This can be very creative. It can be, again, that dark store. It could be a locker that's automated and fulfilled turnkey by the customer. Important to understand the origin point and making this scalable so you can still arrive at being able to do the same day or the rush type delivery that you may want to activate. Obviously, the fleet is very, very important in terms of who's going to be fulfilling that. It can't overemphasize this enough. Some retailers have gone all in on their own in-house fleet, and that's their differentiating strategy. They want to fulfill with their own vehicles and make sure that the freshness and integrity of the product is really maintained. That is their strategy, and they're very confident on that. Others are wanting to go all in on a crowdsource model where they don't want to have any part of the last mile in the delivery. So really understanding that and unpacking the fulfillment channel and the fleet that you want to activate is really important. And then the last thing that we'll get into is thinking about the ecosystem. So it's really important to think about every single component of the ecosystem and ensuring that not only your end customers, but all of your internal participants, from management to marketing to your dispatchers to your driver, that everyone is communicating and connected. And that is very important as you maintain this ecosystem to be able to achieve scale and grow at your own grocery delivery ecosystem. So moving into really what that looks like. And these are really the main components that I've talked about already in terms of what that ecosystem is. So your fleets, your customers, the orders that are coming in, your inventory, and then the origin point, stores, warehouses, what have you. So when you start to digitize this entire supply chain and consolidate it, this can really be thought of as data intelligence, or more so orchestration. And what I'm going to walk through now is some different things to consider and the different components of the supply chain and the ecosystem that need to be connected to deliver on the unique new things that you might be wanting to bring to scale within your delivery ecosystem. So online shoppers really want multiple fulfillment options. So no longer is it okay just to have a same day or a curbside. It needs to be very diverse in terms of having different delivery options. So being able to provide that to your customer in real time based on the actual capacity of your fleets is very, very important from a profitability standpoint. So showing the different delivery options by connecting all the different components of the ecosystem to be able to provide that to the customer, very, very important. Next thing to consider is really that customer experience and communicating with that customer. And that comes back to the overall branding and that experience that you're providing. So providing accurate ETAs, for example, in terms of this is when your order is being processed, this is when your order is maybe going to be leaving from the origin point, and then communicating with them and providing that Uber-like experience all along the way. And then all the way it's branded and giving the customer that great, robust experience.
Sure. And speaking of this, when we're looking at this from a consumer perspective, we all know the pain of waiting for a delivery where you have a 2-hour delivery window, you've been waiting at home for 2 hours, and then the delivery person arrives 45 minutes late.
Sure.
And it's a terrible customer experience. It's going to cost you that customer's loyalty because they're looking for that convenience and you're taking away from them. On the flip side, when you have everything connected, you can provide the customer a more realistic ETA. So whereas the customer may have selected a 2-hour delivery window at checkout, now that they've completed their order, if the right backend systems are connected, you can actually provide the customer with a more reasonable 1 hour, 30-minute, or even 15-minute delivery window, which is providing them that enhanced convenience, which is what we know they're looking for to begin with.
So then in terms of fulfilling on that order from the different origin points that we've talked to, it's very important that the order picking is orchestrated in a way that is ensuring the freshness of the product and ensuring that it's lining up with the arrival of the customer or the vehicle that's going to be fulfilling that order. So very critical to think about the order and the inventory and the origin point all being orchestrated and talking to each other so that you can manage that pick experience and that delivery for ultimate freshness and efficiency. As you think about dispatching, this is a really, really critical point in terms of having intelligent dispatching. When you have multiple fleets that are being taken into consideration, it's important that this can be dynamic and this can be automated and this can be intelligent so that when an order is coming into your ecosystem, it can automatically be assigned to the best fleet to provide that most efficient and most profitable delivery to the customer. So taking the guesswork out or the manual work and making this an automated experience is really, really critical. And you can see the different components of the supply chain that need to be connected in order to do that. Moving on to leveraging your store infrastructure. So being able to have a viewpoint into the arrival vehicles to the store that are doing pickup for maybe curbside. So having visibility into both the customer arriving or another vehicle that's arriving for delivery is really important. And then giving the tools to your team at the store. So whether it's a manager in the back of the micro fulfillment center or it's someone at the front of house that's handling the click and collect area, very, very important to automate and to digitize this so that you're delighting the customer and providing that experience as well. And then obviously driver efficiency and optimizing driver efficiency so that whole process of delivering and the day-to-day and the stops that I need to make, maybe the communication with the customer or the chain of custody and sign off that needs to happen at the customer location. Very important that you're optimizing that efficiency and giving the driver, if it is an in-house fleet, all the tools that they need to be successful. We talked about enabling real-time tracking. This is to John's point in terms of that Uber-like experience. So really this comes down to that customer experience and giving them the visibility, the ability to communicate with the driver, and again, have that look and feel, that branding that's consistent regardless of the channel that is fulfilling on the order. And then finally, giving your customers a voice. And really this comes back to the data and being able to understand, how did that delivery experience affect your customer? Were they happy with that? And if they weren't, what were they not happy with? And really gathering that data and understanding so that you can iterate and continuously improve on that delivery experience over time. Acting on data-driven insights, this is really the tools from a visibility perspective and a data analytics perspective to show the macro trends, to show the annual revenue, to show the different fleets that are fulfilling on your orders and where things are going right and where things maybe are going wrong. This is, again, having the data to be able to measure, optimize, and continuously improve. So what we're looking at here is a high-level view of really what that flow looks like. So on the far left, you have really the origin of the order. So whether that's coming online or whether that's coming from your POS, it then can come into the delivery orchestration platform. And this is where that intelligence is occurring in terms of handing off to the appropriate origin point of that delivery, and then determining what that delivery channel is going to look like. So this could be being fulfilled from a locker or a micro fulfillment center or a retail location. And then from there, the system can determine, again, intelligently, do you want this fulfilled through a crowdsourced partner? Maybe that's going to be the case in a certain geography, and in other geographies or with other customers or for other efficiency and profitability reasons, it makes sense to deliver with your internal fleet. Regardless of what happens, your customer is still experiencing, again, that same branded experience and getting that Uber-like notification, real-time tracking. And this is really orchestration, taking into consideration that order, the origin point of the inventory, the different fulfillment channels, and giving a consistent customer experience is truly the orchestration that you'll require to be able to deliver on this at scale.
So, that's a really interesting point. I think you brought up a few things here that can really impact both the financial element as to how much does it cost to deliver, as well as how can we improve the customer's convenience, as well as some of the operational components here. So one of the questions that we have from the audience, and I think it's a good place to pause for a minute and take this question, is how often do you see companies augmenting their in-house fleets with crowdsourced delivery, and what are some of the reasons why a company might want to combine multiple delivery options, especially from a financial standpoint? So Nick, you want to take that?
Yeah, I think that's a great question. And what I'm seeing in the industry is a hybrid fleet, or quite simply just augmenting your internal fleet with third party, is becoming increasingly more popular. And to your point, the main reason for that is profitability and making delivery more profitable. It's expensive and it's hard work to have the overhead of vehicles and hiring drivers and training drivers and doing all of that and then maintaining all of those assets, efficiently. It's hard. And some companies have done that very, very well, and it continues to be their differentiating factor. But for companies that are just getting into this, a little bit easier to provide immediate scale with a third-party fleet, or at least a hybrid fleet, and then to do that efficiently and profitably. So definitely the answer is hybrid fleets are becoming increasingly profitable, and the reasons are scale and are popular. And the reasons are scale and profitability.
Yeah, and one of the big considerations, and this hits a little bit less in grocery, but we see it in many verticals, is that there's a fair amount of seasonality as well as peaks and valleys in terms of demand. In certain regions, we'll often see that there's far more interest in grocery, for example, on specific days of the week, or requests for delivery during certain hours of the day. And often, in order to meet those demands without overstaffing for delivery, in order to find that optimal balance, somebody will want to use a combination of more flexible pickup locations, whether that's curbside pickup or click and collect or lockers, as well as engaging outside fleets, whether those are 3PLs grocery specialists, or crowdsourced providers. So really, there are a lot of levers here that businesses can use and executives can think about deploying in order to bring down those costs to fulfill and to provide that convenience to the customer, no matter what time of the day it is or what day of the week.
So to really kind of summarize and tie this back in, the best practices that John and I are seeing, that we're seeing in the markets are really laid out here. And the first thing is promote the right delivery options for your market. So understand your market, understand what delivery options are going to make sense based on what the customer is telling you and based on how you want to grow. Number two is align inventory and fulfillment channels with delivery. Very important that you're aligning that origin point with the appropriate delivery channel, so it's feasible. You're able to deliver on a same day promise or a rush delivery promise. The next to consider would really be utilizing the right resources with an intelligent fleet. So really, what that means is understanding how to maintain a hybrid fleet and how to run that effectively. The fourth is using data to make informed decisions, quite simply. And then the fifth is maybe leveraging automated technology and machine learning to improve that speed. So whether that's automated technology in a micro fulfillment center for the picking and things like that, or just looking at machine learning from a technology standpoint to talk about maybe time on site and how can I be more efficient with my delivery over time. So these are the 5 main best practices that we're seeing as you consider really rolling this out at scale.
Thank you. So to bring this full circle, at the end of the day, when a business wants to look at how do I offer, or a grocer in particular wants to look at how do I offer that convenience and how do I manage my costs, the right answer should never be a point solution. The right answer is not going to be you need to engage one more fleet, or you need to look for an automated warehouse. These are all components towards a larger play. What businesses are looking for, and the real epiphany that I've seen as we work with customers through Nick around the world, is that they're embracing a platform-based approach. They're looking at this strategically, and they're saying, what is the core platform I need to put in place so that I can then orchestrate, so that I can understand, so that I can play with different providers, different fulfillment models, offering different price points, and ultimately be able to deliver the right value both to my business and to my customer. And that means I'm going to take into account, where are my strengths as a business? Where do I want to be playing? Where is my brand equity? And what does working through a marketplace mean towards that brand equity and customer relationship? I'm going to be asking, what is the right type of delivery and fulfillment for this market? I'm going to look at what are the different ways I can bring down my costs, or look at delivery as an opportunity to build a relationship and increase my customer lifetime value. And all of these are considerations that need to be taken into account. What are the priorities of my company? What are the strategic threats? What are the shareholders looking for? What are the executives demanding? That pricing strategy, again, this should largely be variable. We see lots of grocers that may have one pricing strategy in cities and another general approach as they look at the suburbs or more rural environments. This means understanding your customer expectations and finding that overlap between your company priorities, your strengths, and being able to meet those expectations in a way that's going to give you ownership and aligns with your corporate objectives. So as I see we're nearly out of time, I just want to pause and to take a couple more questions here. So Nick, how do you see leading grocers justifying investments in delivery when the margins are already challenging?
Yeah, I think that's a great question. What I really point to is the leading indicators from some of the larger grocery retailers in the US, for example. And really what they're doing is they're showing the market that they're going all in on being able to activate grocery delivery for online at scale. So, I mentioned Walmart, they have announced delivery within their annual program across 1,600 stores. Amazon Prime, in terms of their membership, now includes same day grocery delivery, and then the ability to add, general merchandise within that cart. So I think that it's less justification, and this is inevitably the direction that shoppers are going. And it's really more so a relevance and a survival play in terms of being able to grow your business. And there's obviously margins, there's obviously things to consider in terms of the viability of your business short term, but the long-term game is this is where it's going. People are going online, and you've got to set up your framework now.
Really interesting. So, I mean, what I'm hearing is that there are large players like Walmart that have successfully driven larger customer expectations, and that makes it a strategic imperative for grocers to determine how they're going to respond. But not responding is certainly not the right answer. And I think that brings us to, I think, what will be our last question. If anybody has any other questions, please feel free to send them in, and we'll contact you offline with follow-up. And this question, okay, he said, my team already has a staging and micro-fulfillment center set up and is deploying a routing solution. Does an orchestration platform require that I change the technology I already have in place?
No, not at all. And I think that's a great question. And John brought up the point of platform versus point solution. And what a platform does, or an orchestration platform to be specific does, is allows you to really fill the gaps from a technology standpoint that you don't have. So if you've got automation from fulfillment and staging set up, and there's maybe a routing solution in place, maybe what you need to do is be adding different fulfillment channels to that, right? And a platform can help you with that. Maybe it's providing that robust customer experience, or maybe it's adding different things to the staging orchestration with the picking. So when you're looking at a platform, what it really allows you to do is to scale up and then to continue to grow versus filling each individual gap with a point solution. So I think you can consider it that way in terms of looking at it from a platform perspective versus point solution.
Interesting. So thank you, Nick, for all of these amazing insights. Thank you to everybody that attended. I'm sorry we weren't able to get to all of your questions. If you're watching this webinar on demand on our website, please feel free to submit any questions through the Contact Us on our website. And we hope this has been informative, and have a great day.